In Canada's housing market, condos are the weakest link. The steepest drop in sales and prices have been in Toronto. The trends in Vancouver are troubling too.
If I did know that this could have happened, I wouldn't have bought the condo.
Right now, we're experiencing a huge downturn in the condo market.
Canada is in shock as reports of condo project failures are pushing families into serious financial stress. And this situation is getting intense faster than anyone expected. In 2025 alone, about 7,000 condo units were canceled, leaving thousands of buyers stuck with lost deposits and unfinished plans. Families across the country are now watching their savings fade away. As this housing crisis spreads with no clear end in sight, things are starting to feel less like a normal market cycle and more like something breaking in real time.
It's really scary. I'm gonna lose my entire down payment. My worst nightmare to see this day coming.
This half-built condo in Toronto is a haunting reminder to Ami McNoon of what could have been a new home for his family.
It's very unfortunate. We're getting a lot of calls, I'd say 1 or 2 a day, where people are struggling. Closings are coming up this year and they can't cover.
This isn't just a slow downturn anymore. Projects that were supposed to become homes are now sitting half-built, quiet, and abandoned. People are standing in front of buildings that may never be completed, and it's happening fast in certain regions. Around 7,000 condo units canceled in 1 year is not a small number. That means thousands of families suddenly dealing with uncertainty. This doesn't look like a simple slowdown. It feels like the system is under serious pressure. Behind these numbers are real people. Think about buyers like Amy, someone who followed the rules and planned carefully. They weren't chasing quick profits.
Hope was to keep this as something that I can probably later on give it to my children.
Now he could be without a new condo and out tens of thousands of dollars after its value.
They bought a pre-construction condo thinking long-term about stability and their family's future. They put down 20%, which can be tens of thousands of dollars. That's not extra cash, that's years of saving. And now instead of security, they're facing financial loss. When someone says, I might lose everything that I saved, that's not an exaggeration. That's the reality for many people right now. And this isn't just one case.
It's causing stress and distress and misery.
In 2020, Bazios and his wife put down a deposit for a 600-square-foot condo in Toronto, valued at $884,000. But as interest rates rose and the condo market fell, keeping the investment property became impossible. The Bazios couldn't close on their condo, and it was recently sold on assignment for $590,000. They're now on the hook to cover the difference.
Agents report getting calls every single day from people stuck in the same situation. Here's where the financial structure itself creates pressure. Imagine someone agreed to buy a condo for $800,000. They planned everything around that price. Then the market shifts, and now the same unit is valued at $650,000. The bank steps in and says they will only finance based on the new value. Suddenly, there's a huge gap. That gap can easily exceed $100,000.
There's no magic solution here. There unfortunately is very little room to renegotiate with these builders.
They're either going to have to come up with the money, or in the worst case scenarios, I've had to refer some of my clients to trustees and banks.
At the same time, the developer still expects the original price. There's no adjustment and no flexibility. So what options do buyers actually have? Pay a large amount out of pocket or walk away and lose their entire 20% deposit? That's not a real choice. It's a financial trap. And if falling prices weren't enough, there are cases where projects themselves run into serious structural or development issues.
Ami McNoon, those limited options means he'll have to learn to let go of his life savings.
I cannot close, so I have to let it go and forget about my down payment of 20%.
In one situation in Vaughan, a buried structure under a condo project collapsed, raising even more concerns about risk in these developments. Just like that, dozens of homeowners were hit overnight. Suddenly, this wasn't just about owning a home, it turned into a full financial crisis. The total repair bill came close to $2 million, which breaks down to roughly $40,000 per owner. And it didn't stop there. On top of that, they were spending about $30,000 every single month just to stabilize the site while investigations were ongoing. Then after more than a year of waiting and paying, the insurance company refused to cover the damage.
This building was supposed to be Dimitri Bazios' retirement plan. Instead, it could force him into bankruptcy.
It's causing stress and distress. And
it's hard to imagine planning for something like that. You buy a home expecting stability, and out of nowhere, you're facing a bill that can shake your entire financial situation. Then there's the EverTrust situation, which takes things to another level entirely. A condo project in Welland collapsed during construction. That alone is already serious, but it didn't end there. In a related building in Niagara Falls, major defects were discovered, with repair costs estimated between $7 million and $16 million. Pause for a second and think about that. That's not a minor issue. That's a massive financial weight sitting on an entire building. On top of that, there's a lawsuit of around $10 million against the developer.
$1 million house is gonna overall, in the long term, be a much better investment.
The Toronto Regional Real Estate Board expects the average price for a detached or semi-detached home in Toronto to hover around $1 million this year.
So now buyers are stuck in a difficult loop. The building has major issues, the costs are huge, and the legal process takes time. Instead of enjoying their homes, they're dealing with ongoing financial and legal pressure. What really stands out is how this no longer feels like a rare situation. These are not isolated incidents. This is happening across multiple cities, different types of projects, and all kinds of buyers. Even higher-end developments are not immune.
Bazios' story is becoming more common in markets like Toronto and Vancouver, where condo sales have plummeted. In Toronto, condo sales were down 21% in the second quarter compared to the year before, with many forced to sell their units at a loss.
Those buildings.
Ari Zadegan is a broker that specializes in distressed sales. She says those who bought a condo in the last 5 years and hope to flip it are losing thousands.
The idea that paying more automatically means lower risk is clearly being challenged. People who expected security are now facing delays, uncertainty, and growing financial strain. When you connect all these pieces, it becomes much harder to ignore what's happening. Projects are getting canceled, property values are shifting, financing conditions are tightening, construction problems are appearing, and legal disputes are stacking up. Each issue on its own is serious, but together they create a situation where everyday buyers are pushed to their limits, not because of risky decisions, but because the financial environment changed around them. That's what makes this so unsettling. People trusted the process, and now that confidence is being tested, this is where things start to feel almost unreal.
Ones that they were only dependent on the flip are the ones that are hurting.
The soft condo market in Toronto could have a long-term impact on housing supply. Fewer people want to invest in pre-construction, a key part of financing, and developers are backing out of projects. Real estate consulting firm Urbanation has tracked 9 canceled projects in Toronto so far this year.
It's no longer just about price changes. We're seeing entire projects disappear before buyers ever get their keys. In the Greater Toronto and Hamilton area, around 7,000 condo units were canceled in 2025, not delayed, completely canceled. And behind those numbers are real people. You sign contracts, plan your future, and then suddenly there's nothing there waiting for you. The money doesn't just come back quickly either. We're talking about tens of thousands locked into deposits with no property attached. That might be one of the toughest parts, following the system doing everything right and still ending up stuck. And this is where the pressure really starts to spread beyond just individual buyers. Because once enough people are stuck like this, it doesn't stay contained, it starts affecting the entire housing market.
For Bazios, he would like to see not only changes to the ways condos are financed, but also to how they're built.
And stop designing these shoeboxes, because nobody wants them.
There could be some relief in sight, with the Bank of Canada set to make an interest rate announcement next week, with some economists predicting a modest rate cut.
Think about it. When thousands of buyers are locked into canceled projects or facing massive financial gaps, they can't just move on and buy something else. Their money is tied up, their plans are frozen, and that slows down demand across the market in a very real way. At the same time, developers are also under pressure. Rising construction costs, tighter financing, and weaker demand are making new projects harder to launch. So now you've got fewer new developments starting, while unfinished ones are sitting idle. That's a dangerous combination. And the banks, they're reacting too. When risk increases, lending becomes stricter.
Accumulate a larger down payment given home prices, but also obviously to carry those payments over the longer term.
It costs a lot of money. That's why Perry Malgosai co-founded Husmates, a platform that matches potential buyers with others who are looking for similar properties.
That means higher requirements, more scrutiny, and fewer approvals. So even buyers who are ready and stable financially can suddenly find themselves blocked from moving forward. This creates a chain reaction. Buyers are stuck, developers are cautious, lenders are tightening, and the entire system starts slowing down. It's not one single failure, it's multiple pressure points all hitting at once. What makes this even more intense is how fast sentiment can shift. Markets don't just run on numbers, they run on confidence. And right now, confidence is clearly taking a hit. When people start hearing stories about canceled projects, lost deposits, and unexpected costs, they hesitate. They wait, they pull back, and that hesitation alone can slow things down even further. So now you're looking at a market where activity drops, uncertainty rises, and everyone becomes more cautious at the same time. That's not just a cooling period. That's a system trying to adjust under pressure. And for everyday buyers watching all of this unfold, the question becomes a lot bigger than just, is this a good time to buy? It turns into, can I trust this process at all? When we zoom out, the situation gets even heavier. In British Columbia alone, roughly $500 million in condo-related debt went into default within a single year. That kind of failure often leads to receivership, meaning an outside party has to step in because the developer can't complete the project, so entire developments get frozen, and buyers are left stuck in limbo with no real control over what happens next.
Buying your first home used to be a rite of passage, but with rising costs, many potential home buyers are feeling priced out. So, some are looking at a different option.
Co-ownership is becoming super popular because it's a great way to match our sort of modern lifestyles to housing requirements today.
And this is where the deeper issue becomes visible. Builders themselves are under extreme pressure. Insolvencies jumped by more than 30%, and in Ontario alone, around 600 to 700 builders went bankrupt in just 1 year. When a builder collapses, everything stops instantly, and buyers are the ones left exposed to the fallout. Then the market conditions make it even worse. Sales have dropped by more than 30%, prices are down around 13%, and demand has fallen to a 35-year low. That combination creates a situation where some buyers end up owing more than their condo is worth before they even move in. But what really stands out is that many of these buyers are not investors. Around half are first-time homeowners, regular people simply trying to secure a future and build stability. Now, many of them are left dealing with losses, stress, and deep uncertainty. For some, it eventually reaches a point where there is no easy way out. Mortgage stress is rising quickly. In parts of Ontario, delinquency rates have doubled, meaning more people are falling behind on payments. That's usually a sign that serious financial strain is building underneath the surface.
Co-ownership in the way that Leslie and I and Husmates is doing it is really about bringing intentional community to as the sort of like base that you're building from.
So you think you found someone that you can manage and share a property with, but there's much more things to consider with home ownership than personal compatibility.
So what options are left for buyers at this stage? Some are forced to sell, often at a loss. Others simply can't cover the financial gaps we've already talked about. And in more severe cases, people face legal pressure or are referred to bankruptcy trustees. That is not something anyone expects when signing a home purchase agreement. What's most concerning is how little flexibility exists in the system. There is no simple renegotiation process, no strong safety net, no quick fix that steps in to reduce the damage. Once you're in, it often feels like you're locked into the outcome, even if everything around you changes. And that's one of the hardest realities here. The system doesn't always provide a soft landing. It's more like a straight drop. And beyond the numbers, there's the human side, because at first everything feels hopeful. People plan their future around a new home, imagining stability and progress. But over time, things shift. Delays start stacking up, prices move in the wrong direction, and pressure quietly builds. At first, many tell themselves it's temporary, but then payments feel heavier, values drop further, and stress starts to grow. The constant checking, the uncertainty, it all builds slowly until panic sets in, and then comes the hardest moment, realizing you might have to, walk away, not because you want to, but because there's no other option left.
And one lawyer says establishing a co-ownership agreement could help.
It's a business prenuptial agreement. You hope that there aren't any disputes, but if they are, you've laid it all out, how you're going to deal with it, if you're going to go to court, arbitration, who your arbitrator is going to be.
Losing a home is painful, but losing a large deposit on top of that is financially devastating. And for many, it happens quietly without anyone really seeing it unfold. And now the situation starts shifting into something even more uncomfortable for everyday buyers. Because once the pressure builds this far, the question is no longer just about prices or projects. It becomes about affordability at every level of the housing system. Even people who were previously ready to buy are starting to get pushed out simply because the numbers no longer work. Interest rates and borrowing costs have made everything tighter. Monthly payments that once looked manageable are now stretching household budgets to the limit. And when financing becomes more expensive, it doesn't just slow buyers down, it changes what people can realistically afford in the first place. At the same time, rental markets are also feeling the pressure. More people who plan to buy are staying in rentals longer, which increases competition and pushes rents higher in many areas. So even those who step back from buying aren't necessarily finding relief, they're just moving into a more expensive waiting zone. Developers are watching all of this too, and many are pulling back on launching new projects. If sales slow and financing gets harder, fewer new builds start. That means future supply could shrink.
Walker says these agreements minimize disputes and potential legal costs and could even salvage personal relationships, especially if co-buying with family or friends.
It's very expensive to live here. Can build your credit by owning a property with someone else, and that might work out that way, but have to think about the disadvantages and how to deal with that.
Which creates a strange cycle where today's slowdown can actually create tomorrow's shortage risk. And that's where things get tricky, because the system starts reacting to itself. Lower demand leads to fewer projects can lead to tighter supply later, and tighter supply can eventually push prices in unexpected directions again. It's not a straight line. It's a loop of pressure, building and releasing over time. What makes this especially tense is how uneven the impact is. Some buyers with strong financial buffers can hold on and wait things out, but others who stretch themselves too far are the first to feel the strain when conditions change even slightly. And in the background, there's still a large number of pre-construction buyers waiting for homes that may take years to complete, or in some cases may never fully materialize in the way they expected. That waiting period itself becomes a financial risk because conditions can change completely before the keys are even handed over. This is why the uncertainty feels so persistent. It's not just one problem. It's timing, financing, construction, demand, and confidence all moving at once. When all of those pieces shift together, it creates a system where planning long-term becomes extremely difficult. And for many people, the biggest challenge isn't just the financial side anymore, it's the feeling of not knowing what comes next. Because when every part of the process can change while you're already locked in, even safe decisions start to feel uncertain. And that's the situation for today on Yesterday Canada. If you want more updates like this, drop your thoughts in the comments and subscribe so you don't miss what happens next.